Hello and welcome to Sunny Talks Money. I'm your host Sunil Thakker, and today we're diving into everything that moved the US market on Wednesday, May 28, 2025. It was a day of mild declines, some big news in the AI and retail sectors, and more signals from bond markets. Let's break it down. After flirting with all time highs earlier in the week, Wall Street took a breather yesterday. The S&P 500 slipped 0.6% to close at 5,889. The Dow Jones Industrial Average also slipped 5.6% to finish at 42,009, while the tech-heavy Nasdaq dived 0.5% to end at 19,101. All three major indexes remained solidly positive for the week, but yesterday's session reflected a cautious pause. Perhaps investors are catching their breath after a strong May rally. Let's get to the headline maker of the day, Nvidia. The chip giant crushed expectations once again with first quarter revenue hitting $44.06 billion, a 69% jump year over year. The engine behind this performance? No surprise, it's AI. Nvidia's data center segment alone brought in $39.1 billion, up a whopping 73% compared to last year. But it wasn't all smooth sailing. US export restrictions to China caused Nvidia to take a $4.5 billion inventory charge, and they were unable to ship $2.5 billion worth of H20 chips. The company expects these limitations to knock $8 billion off its second quarter revenue. Still, investors looked past these concerns. Nvidia stock popped up 5% in after hours trading, suggesting confidence in the company's long term AI dominance. Well, it wasn't just tech in the spotlight. Retail earnings gave us a mixed bag. Abercrombie and Fitch continued its resurgence, blowing past analyst expectations and lifting its full year outlook. The stock jumped in response, reflecting strong traction among younger consumers and better inventory control. Macy's, on the other hand, also beat earnings estimate but couldn't hold on to gains. The company echoed what we are seeing across several sectors: uncertainty around tariffs and costs. Macy's joined a growing number of firms that have either lowered guidance or pulled it entirely, citing economic unpredictability. Over in the bond market, Treasury yields ticked higher, suggesting the Fed may remain hawkish or at least cautious for now. The 10-year yield rose to 4.51%. The 30-year bond increased to 5.04%. In other asset classes, Bitcoin, it traded around $107,316, experiencing a slight decline of approximately 1.5% as the market undergoes consolidation following recent gains. Spot gold prices stabilized at $3,302 per ounce, recovering from a previous decline of over 1%. The market's focus has shifted to upcoming US economic data, particularly the Core Personal Consumption Expenditure PCE report. Oil prices hovered around $61.53 per barrel, the WTI, reflecting a modest increase of 0.22% from the previous trading day, influenced by global demand expectations and inventory levels. Looking forward, investors are eyeing two big things. One, Friday's PCE inflation report, the Fed's preferred measure. If that number runs hot, we could see some renewed volatility. And two, more Fed commentary. Several FOMC members are speaking this week. The market will be listening closely for any hint of dovishness or warnings of higher for longer. Meanwhile, earnings season is winding down, but we will still hear from a few tech names and discount retailers, which could offer further insight into consumer sentiment and margins. That's your wrap on the US markets for Wednesday, May 28, 2025. And just to recap, tech remains strong, AI is still the crown jewel, and cautious optimism continues to drive this market higher, even with some short term turbulence. If you found this breakdown useful, don't forget to like, subscribe, and share it with your fellow investors. This is Sunny Talks Money, and I'm your host, Sunil Thakker, reminding you remember, it is all about money. Thanks for tuning in and stay sharp.